Greetings, fellow traders. I am happy to be back with you guys today. Gold is on track for a major correction, and the setup is looking pretty juicy. So, ever since the war started between Hamas and Israel, gold went on this huge bullish run where we saw 1,000 pip move, and it just went crazy. So, the market became kind of unstable and unpredictable, and gold decided to break away temporarily from its interaction with the US dollar, and it made the movements on gold very unpredictable. Now that time has gone on and the market has had time to adjust to the situation between Hamas and Israel, things are starting to come back to normal, and gold and the US dollar are starting to fall back into that relationship where when the US dollar is up, gold is down, and when the US dollar is down, gold is up. So we can track the US dollar to see the movements that's going on with gold, and we can get a pretty good idea as to what gold is going to do. So if you are one of those traders who decided to get out of the market because you got burned, you saw the US dollar going up, and then gold was going up too, and you saw the US dollar going down, and then the gold was just doing whatever it wanted to do, and it was just too hard to trade. Now is a good time to get back in, and I'm going to show you guys some great ways how you can effectively trade this market. So let's get into the charts and get going. Okay, so now that we're at my trading view, let's get into what I am looking at when it comes to gold. And I keep my charts pretty clean, so I don't use too many different indicators. I do have multiple setups as well, just for visual purposes. But for this video, what I want to focus on is the detrended price oscillator, which is a great tool for confirmations when it comes to support and resistance. Because a lot of times when you trade off of support and resistance, you really don't know if this is going to be the resistance, and you really don't know if this is going to be the support, and when those levels are going to be broken. What the detrended price oscillator does is it doesn't focus on trends, it focuses more on cycles. So it calculates times when the market will be bullish and times the market will be bearish. I could just open this up real quick just so you guys can see this. I definitely recommend using this. It's a great tool. If you just go to the about this script, so this right here is the full indicator right here, and you can just search it on your indicators if you wish to add this onto your trading view. So just click on indicators, type, and then in the search bar, type in detrended price oscillator, and it will pop right up for you. But simply put, the detrended price oscillator is used to remove trend from price, and this is done in order to identify and isolate short-term cycles. DPO is not typically aligned with the most current prices. It is offset to the left, the past, which helps to improve current trend. So this kind of cuts out a lot of the noise in the markets, and we can kind of see here, for an example. So if you look at gold right now, you can see that it's at a area of support. We are currently on the daily time frame, and there will be many traders who are looking at this and they're thinking, okay, what the last time gold reached this level, look what it did. So gold is getting close to that level. So there's going to be a lot of traders who are going to start looking to buy. But if we look at the detrended price oscillator, it's telling us something very different. It has the highest point was right here, which was this level. And then you can see it's steadily going down, which means this is on the beginning of a strong downtrend. If you guys remember, before the war broke out between Hamas and Israel, gold was actually already on a downtrend, and it was actually getting very close to break down into the 1800s. But then, as soon as that war broke out, everyone went crazy and they started buying gold like crazy, and then gold shot up over 1,000 pips. Now that everyone has just kind of gotten used to everything, and there's no more shock to what's going on with the Middle East, the conditions have returned back to normal. If you guys also remember, um, the US dollar was doing its own thing and gold was doing its own thing. Anytime you have a currency pair, both currencies inside the currency pair are supposed to affect what is happening. So if you have the US dollar that is bullish, then technically gold should be bearish. So what we saw was both the US dollar and gold was shooting up like crazy, and it made everything very unpredictable. But now you can kind of see things are starting to stabilize. Gold or the US dollar is up 0.10% and gold is down 0.07%. So that's very close. And that's the way it's supposed to be. So those percentages are supposed to stay very close together. And as long as it's like that, then we can use the US dollar as a tool to gauge what is going to be happening with gold. So that's one clue right there. But let's look at this a little bit further. So as I mentioned before, uh, we are approaching a strong area of support, and this is not, in fact, the support zone, because this support zone is going to be broken, because we can see here that the detrended price oscillator, DPO, is having lower lows and lower highs. We see this change of character right here. So there might be a little bit of a pullback, but more likely gold is going to continue down a strong downtrend, and we should see a big correction because gold is way too high right now. Gold should be somewhere in the 1800s, which is why this is a very big deal. Now is the time to start getting into your shorts for some long-term holds, for some pretty big gains. So the way I'm going to be playing this is I'm using my Lux Algo forecasting indicator to give an idea as to where my take profits should be. So placing your shorts right around here, with the idea of taking profit somewhere around 1950, 1955. If you want to be safe, you can even use 1960. Should be good. And anytime you have a change of character, there's usually going to be a pullback. So this move right here is the pullback that is being predicted. So we could see that gold drop down to 1950, 1955, and then maybe pull back. I don't think it's going to pull back this high. I think that's kind of extreme, but it could pull back maybe to like 1970, give or take. So that can be a very good area to sell from. So if you don't want to use market orders, I recommend doing limit orders somewhere around 1970. Or what you could do is maybe a sell stop order. But if you use a sell stop order, you probably want to be extra cautious and maybe put your sell stops around 1945, because if the price drops to 1950, it still might pull back. My forecasting indicator is saying it could pull back all the way to 1985. So to be on the safe side, once this area has been broken and gold drops below 1950, we should see gold fall back into this range right here. And you can see this is a juicy setup, guys. So 1813 to like 1858. This is really where gold should be at, somewhere between that level. So just imagine if you can start to get your sales in um, at this current price. I mean, we're talking well over 1,000 pips if you want to hold it on for that long. If we look at the shorter time frames, we can see how this is very consistent. Before I go into the shorter time frames, I just want to point out the DPO is a very good tool for knowing when to buy and sell, because every time the price breaks the zero line, that's when you want to buy from. So if you're looking at this right here, the DPO is saying that the time to buy was right here, or not right there, roughly right around here. This was a time to buy, according to the DPO, and this would have gave you the best chance to avoid pullbacks and retracements. And you can see here, if you use the DPO at this situation on the daily time frame, you could have been in a huge profitable position. And now we can see that it's already doing the correction. So eventually it is going to break this line and trigger a sell signal. And it'll probably trigger a sell signal somewhere around 1900. But this is a great time to get in the trade very early. So you can use some small positions and you can just hold on to them, and you'll be good in the long run. So let's go to the shorter time frames just so we can get some other ideas. So we'll go to the 1 hour time frame. So we can see here, as long as the DPO is below this zero line, that means it's still in a bearish position. So in this situation right here, even though it's going up, we're not really expecting this to go too much above the zero line, if it even does that. Most likely it might come to the very top and then it's going to go back down. So we can already see, at least short term, the price should drop down to 1950. But like I said, I think it's going to finally break below 1900. I don't know if it happened this week, maybe next week, but gold is very bearish in my opinion. If we go to the 15-minute time frame, let's see what that is saying. Okay, so this is great. So on the 15-minute time frame, the DPO has already given us a sell signal right here. And when your charts look like this, it can be kind of hard to go off of support and resistance because the range is very tight. So when you have something like the DPO that gives you a third eye, so to speak, it's very effective in terms of making your decisions. So with gold being at 1967.860, this is a great time to get in with some smaller positions. We could see some pullbacks around 1975. I think we have some news coming up tomorrow with Fed Chairman Powell. So that might create some volatility. But overall, gold is going to be heading down long term as well. So we see on the 15-minute time frame, DPO has given us a sell signal. We can also see with the Lux Algo forecasting indicator that this is also bearish. So we look at the 1 hour time frame. We can see it is going up, but I don't see that there's enough strength for it to trigger a buy signal. But even if it does, it's going to be just a very small pullback. It shouldn't go past 1980, in my opinion. And we can even see with the forecasting indicator, it's still saying downtrend or bearish as well. So we have those things to look at. And then if we look at the 4 hour time frame, let's see what that is telling us. So this is situations where you kind of know where something is off. So on the 4-hour time frame, it's saying it can possibly go up to 2019. Um, we definitely don't see that happening. However, if you wanted to be safe, you could place a buy stop order. So let's just say, for example, I don't think the price is going to go up past 1980. But if you're one of those people who's like, well, you know what, just in case I'm wrong, what you could do is you could place a buy stop around 1980. And this way, in case it happens, then you're covered if it goes on a unexpected bullish move. So I definitely like using buy stops and sell stops for these types of situations, but I really don't think we're going to need it. And if we look at the DPO as well, we can see that this is a strong bearish territory. We're nowhere near the zero line. So I don't see any justifications for a bullish move on gold. And on the daily time frame, we can already see that this momentum is really diving down. And even on the daily time frame, it only has a pullback to maybe 1986, and it's saying that could happen on Thursday. That's kind of iffy. I don't think it's going to reach that, but a couple things to watch out for. So that's my take on gold, and this is how I'm trading it. I love using a change of character and break of structure. We can see here that if we just look at it from here, we have a low, we have a high, and then we have a low, and then the change of character would be right around here, since the candle broke here. So usually when you have change of character, you do have a pullback. So it's kind of hard to see if there's a pullback on the daily chart right here. But if there is a pullback, the pullback could probably be like 1975, 1980 at the most, and then it's going to fall. And because it's on the daily time frame, we're looking at a long period. And we can also see here that this area right uh is pretty much the high, is pretty much the peak of gold. So we want to see gold in a realistic range, and I believe that realistic range is going to be somewhere between here. So this range right here should be where we can expect gold to actually be at. And if that happens, I mean, we're looking at well over 1,000 pips. And that's my take on this. I hope this was helpful for some of you guys who are looking to trade gold. And I'll have a couple more coming out with the Euro US dollar, and maybe another currency pair if I could find something that's solid. I don't like giving information on currency pairs that look kind of sketchy, just because it's too unpredictable. But I feel like with gold, this is a pretty solid setup that a lot of people will be able to benefit from. All right, guys, I will see you in the next video, and thank you for being here. Take care, guys.